Hello again. We're going to finish our incomplete records control account method now that we began a while back for A. Murphy. We know that it's the control account method because we can see the debtors at the start of the year and at the end of the year here in the final paragraph again. And in the question itself, we can see in our bank lodgements the amount of money the debtors paid us during the year. And with those three bits of information, we know we can do a debtors control account. Similarly with the creditors, we can see up here the amount that they owe us, that we owe them at the start of the year. At the end of the year, we can see the amount we still owe our suppliers, 32,600. And during the year in our bank payments, the first entry there is the amount that we paid our creditors during the year. So again, armed with those three figures, we can do a creditors control account to find the purchases. That was how we established that this was a control account method. We identified that there were 6 steps to be followed in solving these questions. The first one was to find the opening capital and the goodwill, which we did here by taking the liabilities and the assets. Then we moved on to the second step, finding the sales through the cash account, the cash sales, and the credit sales from our debtors control account. Step 3 brought us to the calculation of purchases. The cash purchases being given to us in the cash account, and we found the credit purchases by doing a creditors control account. Step 4 was to do all of our adjustments for loan interest and insurance and general expenses, light and heat, and while doing it, working out the drawings that would be charged to the owner. Step 5, bottom right here, we did the bank account to find how much. Lastly, step 6 was the calculation of the drawings for the year. With all of that done then, it was only a matter of entering those figures into the final accounts here on the left and the balance sheet on the right. So we have a trading account for Murphy for the year ending. We've got the sales, less the cost of sales, giving us the gross profit, to which I've added the investment income, from which I've subtracted the 5 expenses to get the net profit. Remember now that this is incomplete records for a sole trader. I'm not doing the published accounts of a company, so I'm not that worried about the actual format here or the headings for expenses or the order in which I put in investment income or loan interest. It's not relevant to this question. The balance sheet similarly, I've got my tangible fixed assets there. The premises were originally 180,000 and we bought 90,000 more from the proceeds of the loan. We bought delivery vans and we bought €30,000 worth of furniture, a quarter of which was charged to the owner in drawings. We have the intangible fixed asset, the goodwill, the attractive force that brings in custom, 27,700, calculated in note 1 or adjustment 1. We've got the investments, that's the 1,250 for each of the 4 months plus the €30 investment income earned. We've got 5 current assets. In this question we have no provision for bad debts. Of course, these assets come from the 31st of December figures, or those calculated by us along the way. That's the current liabilities or liabilities due within a year. And in here, I've put the loan instalments. There were none in this question because we remember that the 120,000 borrowed was being paid back in a lump sum in some future date, so no instalments. If any of the instalments were due and unpaid, or if they were falling due within the next 12 months, they would have to be inside in our current liabilities. So we've got our current assets as current liabilities, giving us the working capital, and then the net assets, the sum of the working capital and the intangible, financial and tangible fixed assets. Finance by, there's our liability due after a year, there's our bank loan, 120,000, and we have our typical capital add profit, less drawings here. Remembering that the €4,000 worth of dividends was earned by the owner and invested in her business, so that's capital introduced. The net profit was in the profit and loss account, and our drawings was the sum of the individual drawings that we did in adjustment number or note number 6. So there's our balance sheet, and we've successfully completed our incomplete records. The last part of this question asked what was meant by the accruals concept, and I've explained it there. There are 4 fundamental accounting concepts: the going concern, accruals, consistency, and prudence, the prudence principle. This one is asking us to explain the accruals concept. As I've said there in the second paragraph, that refers to the practice in accounting of when doing the final accounts for a period, we include all income and expenditure relating to that period, whether it was received or paid or not. And then it's always best to give an example taken from the question itself. So we saw in this question that there was €30 owed to the firm at the end of the year for investment income, and although it wasn't received, we did credit it to the period. We did put the €30 in as income in the profit and loss account. Similarly, we spent 6,800 on light and heat, but as we owe another 380 at the end of the year, it was 7,180 that we worked with. That's the accruals concept. The typical question that's asked in the theory part of incomplete records is what advice you would give the business owner. And we look at that in the net worth method of incomplete records, the video for which I'll be putting up after this. So there you have it. Thanks for your attention. Goodbye for now.